Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, hope you had a happy Lunar New Year, and thank you for coming on.
Thank you for having me.
So the World Health Organization has admitted a mistake about the coronavirus. It had been calling the risk moderate, but now it's saying it's actually very high in China and high around the world. So fears of it spreading globally are affecting the financial markets. What's your outlook on this?
Sure. With that news, global equity market tumbled. If you look at the U.S. market, it was down more than 1.5%. NASDAQ was down 1.9%. For the 2 days overall, last Friday as well as Monday, the U.S. markets were down around 2.5%. Chinese markets closed until the February 3rd. They have extended the holidays until originally it was until the 30th, but now it's the February 2nd. And on Friday, Chinese market fell by more than 3%. And with this, if you see the greed and fear index for the U.S. market, it collapsed to 47 level, which is a neutral territory from the euphoria of 97 about several weeks ago. Clearly, we can see that there's been panic happening by the investors throughout the world as the European market fell by more than 2.5% also on Monday. However, though, we need to compare and we have to be less panicky about the whole thing, because if you look at the past of the SARS incident in 2003, GDP growth rate was cut by about 1 percentage point or so globally. And market did go down by about 2-digit numbers. However, though, we think that right after that, you've seen the market rising by more than 20% for U.S. and a huge injection of liquidity that happened that allowed the economy to recover. Also, we need to compare the current fatality rate of the coronavirus, which comes out to be only 2.5% relative to the B-type influenza that occurred in U.S. in 2017-2018. The death rate was as high as 8% plus. So I think that people are being a bit more too panicky about the whole situation. Of course, we need to be aware of this current incident, and we have to be preparing for this. But nevertheless, we don't think that this will result into the economic recession global scale. We think that this can be maintained and contained within the short period of time, and that this is not going to cause a global panic, we think, in a long-term basis.
Right. Well, uncertainty here in Korea, too, is quite high now, with several cases confirmed. The government's holding an emergency meeting an emergency meeting of economy-related ministers today, and they said they're working to minimize the impact on the markets and the real economy. But what kind of impact do you see locally?
Right. I mean, it really depends on the level of this incident. How long will it last in the future? If you look at the recent period, the holiday seasons, we should have received quite significant amount of the Chinese tourists from China. But if you look at during the holiday seasons, China's air flight amount was down by more than 40%. Most of the transportations were down by more than 40%. And if that kind of trend continues, then obviously that will have a negative implication for the tourist industry for Korea and any of the Chinese-driven consumption that we've seen in Korea. However, though, we think that the fatality rate is not that high, and we think that the level of the control will be happening quite quickly with what Chinese government is doing right now. And I don't think that the closing down the cities will last for a very long period of time. I think that they're trying to control this very quickly, and so that it doesn't have a lingering effect for China in a longer-term basis. Also, as you said, Korean government have said that they will use the budget to negate any kind of negativeness from this incident. Yes, though, in the short term, people will be concerned about the decline of the GDP in the short term. In the SARS incident, as I said, it had impacted about 1 percentage point of GDP growth for the global scale. This might have that kind of impact as the Chinese government and Chinese economy is one of the biggest of the global economy, and that the size is about 20% of the total global economy. So if that slows to, say, 5% growth rate from 6%, that should have somewhat of a negative implication for global economy, and that will affect negatively on Korea. However, though, once again, government will be boosting the economy through various measures, including the rate cuts, the liquidity injections, and the fiscal expansion policies. So therefore, we don't think that this will be in a situation where, dire situation where we see a massive correction or massive recession that in the future.
Got it. Well, briefly, Mr. Yu, we'll see a bunch of earnings numbers this week. That and what else should we be watching this week?
I think that earnings numbers are coming in line with expectation, or actually better than expectation, so we should keep watching that. But more importantly, what would the FOMC meetings will talk about? Is there any possibility of additional liquidity injection? They're watching closely of this coronavirus incident. U.S. economy is one of the resilient economy, and obviously they need to continue to have that in order for Donald Trump or anyone in U.S. to continue to be the winner in this competition era.
All right, we'll have to leave it there. Mr. Yu, thanks so much for coming on, as always.
Thank you very much.